Hello everyone, I am Pratap here. We are at part 5 of lesson 21. So it is about aggressive trade within HLQ zone strategy. And this lesson is having dependency on the earlier lessons. In case if this is your first visit to our channel or if you did not complete the earlier lessons, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel in a playlist Supply Demand Zone Price Action course. I also provided the link to this playlist in this YouTube video description, and if you click the link you will get into this page and then scroll down to the bottom of this page. Here starting from lesson 1.1 all the training lessons are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we provide a new YouTube video, we will provide an update in the channel. Now let's get into the main discussion. Lesson 21, part 5 of lesson 21. So this is about aggressive trade setup within the high liquidity zone. We have already discussed high liquidity zone strategy in lesson 21.3. That is the third video of lesson 21. So you already started using the high liquidity zone strategy and also planning your trades. But while planning, sometimes your high liquidity may not be having the fine-tuned zone. Sometimes. Earlier we learned 5 minutes fine-tuned zone within daily or 75 minutes HLQ zone is a confirmation to the institutional pending order flow. This is how we've been trading all these days. The fine-tuned 5-minute zone is only the confirmation for us for identifying the institutional order flow. That is the reason why we have success rate more than 80% for all our trades. But you should also understand there are times we may find 5-minute zones but not a fine-tuned 5-minute zone. How we will identify? These 5-minute zones will be having directly confluence with either daily zone or 75-minute zone. That means inside a daily zone or 75-minute zone, directly you will be having a 5-minute zone confluence. There is no fine-tuned zone. What is that fine-tuned zone you learn? 5 minutes should be overlapped with 15-minute zone. 15 minutes should overlap with 75 minutes high liquidity zone. If 75 is not a high liquidity zone, the 75-minute zone again it should overlap with daily high liquidity zone. If such kind of overlap takes place, we call it as a fine-tuned zone. This is what we learned in our lesson 16 in our training program. But such kind of overlap is not there. How the overlap will be there? Instead of 5-minute zone is having overlap with 15-minute zone, instead of that, the 5-minute zone directly overlap with 75-minute zone or daily zone, just bypassing the 15-minute zone. So sometimes you will be seeing such kind of zones. And in general, these kind of 5-minute zones would be violated easily, because they are not the real institutional order flows. They are all small zones created with small order flows. Sometimes institutions wants to trap you. You will take a trade, you identified a 5-minute zone, then you feel, yes, I got a 5-minute zone, and you go and take a trade. Immediately the zone will be violated. You might be thinking, why my 5-minute zone is not working? because that is not a fine-tuned 5-minute zone. Please always remember, the fine-tuned 5-minute zones are having the real institutional pending order flow. But sometimes these 5-minute zones which are not fine-tuned zones, these 5-minute zones which are not fine-tuned zones also might be having a strong institutional order flow. That is what I told in this point. Sometimes in some special situations, these 5-minute zones might be having strong institutional pending order flow. But how do we know? See, if you find such kind of zones, maybe if you find 100 zones, maybe 20 zones or 30 zones will give you a good result. Remaining 80 times you will see a failure. See the success rate. Success rate is less than or equals to 20%. You have failure rate more than 80% failure rate. When you have such kind of zones or having such kind of high failure rate, do you trade in those zones? No, we never trade. Why always we are going for fine-tuned zones? Because they are having higher success rate. Especially the fine-tuned zones in high liquidity zones, not the normal zones. The high liquidity demand and supply zones from daily time frame or 75 minutes time frame, they have more than 80% success rate. We have experienced so far. So that's why always we are looking for fine-tuned zones. But these normal zones, 5-minute zones, not a fine-tuned 5-minute zones, but just directly having confluence with your daily zone or 75-minute zone. Such kind of zones are having less success rate. Even then, sometimes they have strong institutional order flow. If that is the case, if we are ignoring those zones, we will be missing good trade opportunities. Or if you start taking trades in every such kind of zone, you will be seeing more than 80% failure rate. Then how to solve this problem? How do we know these special 5-minute zones are having strong order flow? How to identify? For that, we will be using a price action clue. The special 5-minute zone should be identified with the price action clues. So what are these price action clues? That is what we are going to discuss in the next slide. But the point you have to understand, those 5-minute zones which are not fine-tuned 5-minute zones, but they are having a strong institutional order flow. Such kind of zones we will identify with the help of price action clues. And those price action clues we are going to study in this particular video. And when you are taking trades in such kind of special 5-minute zones having institutional strong order flow, when you are planning trades on these kind of zones, it is called as an aggressive trades. Trades planning on these special 5-minute zones are called as aggressive trades. Now hope you got clarity what exactly the meaning of aggressive trade. These 5-minute zones should not be fine-tuned zones, but these 5-minute zones should be supported by some price action clues we are going to learn. And such kind of zones, if you are planning the trade, that trade is named as aggressive trade. Okay, how to identify these aggressive trades with price action clues? What are these price action clues? Primarily, we are using 4 price action clues. The price action clues for identifying the aggressive trades can be, first one, rejections near the 5-minute zone. You already learned rejections in the previous video. So what is that this point is saying? Rejections near the 5-minute zone. Which 5-minute zone? Not a fine-tuned 5-minute zone. The normal 5-minute zone. If it is near the fine-tuned 5-minute zone, then that is a very, very good trade for us. This is not a fine-tuned 5-minute zone, but near the zone, rejections are there. Near the zone. Don't forget that point. Near the zone. Then next time prices are entering into that particular zone, we can take the trade. So what is the reason? That I will explain in the examples. The second one. Multiple rejections from the 5 minutes or 1 minute zone. Multiple rejections from the zone. See, the previous one is rejections near the zone. Maybe it could be one rejection or multiple rejections. It doesn't matter. But in the second scenario, multiple rejections from the 5 minute or 1 minute zone. Multiple means more than once. Maybe already 2 rejections, very good rejections are there. Definitely we can plan a trade in the third time. See, sometimes, our success rate is 80%. 20% will be, failure rate will be there. Sometimes they may fail. At that time we need to accept that stop loss. But failure rate is less, success rate is more. That is the point you have to understand. Multiple rejections from the 5 minutes or 1 minute zone. I will show you the examples. And the third price action clue is pro gap from the 5 minute zone. Suppose you have a 5 minute zone, inside our 75 minutes or daily high liquidity zone. But it is not a fine tuned zone. But the zone is having a pro gap. Then you can plan a trade. Why it will work? That I will give you the reasons in the examples once we get into the examples. And the fourth one is the high liquidity 5 minute zone. Whatever the 5 minute zone, which is not a fine tuned zone, if it is a high liquidity zone, that means 5 minutes high liquidity is there inside 75 minutes high liquidity. Or 5 minutes high liquidity is there inside the daily high liquidity, but not having zone confluence. In such kind of situation, you can directly take a trade in this 5 minutes high liquidity zone. Then we call it as an aggressive trade. Reason we are calling aggressive trade is it is not a fine-tuned zone. Always remember, if the zone is not a fine-tuned zone and directly you are taking a trade, that trade is an aggressive trade. And if you are expecting success to your aggressive trade, price action clues should be supported. Without price action clues, if you are taking an aggressive trade, there are higher chances your trade will be failed. Always remember this point. Never go for aggressive trades without price action clues mentioned in this slide. Now let me show you the examples. The first example, let us see rejections near the 5 minute zone. Actually, I gave 2 examples for this point. Look into this stock. This is a UPL. The name of the stock is UPL. This is a 75 minutes high liquidity zone. But the chart I am showing you is a 15 minutes chart. It is a 15 minutes chart. So the big zone, whatever you are seeing, the light green color, it is a 75 minutes high liquidity zone. So inside this 75 minutes high liquidity zone, we have a drop, 2 base candles and a rally. This is a 15 minute zone. Again you have a rally, 2 base candles and again a rally. This is also a 15 minute zone. Inside 15, again we fine-tuned with 5 minutes. Just forget it. They are the fine-tuned 5 minute zone. But look into this, the third one, the top one. This is not a 15 minute zone. That means this is a 5 minute zone without 15 minute zone. That's why this 5 minute zone is not a fine-tuned zone. And if you want to take a trade in such kind of zones, many times these zones will be violated. Many times. At least 80% scenarios, such kind of 5 minute zones will be violated. In 20% scenarios only you will be seeing success, mainly because there could be some strong price action clues will be there. So what is the price action clue? rejections near the zone. See here, prices came very close to this zone. Close means near to this zone. And then see the huge push. There is a huge rejection from here. And you will understand this rejection if you look into daily time frame or 75 minutes time frame. You will be seeing a very big candle. So what does it mean? The meaning is, just before the zone, institutions placed a strong buy order flow here, because this is a demand zone. A strong buy order flow is they placed. Probably from this 5-minute zone till this zone, there is a strong buy order flow. Next time prices are entering into this 5-minute zone, what should happen? All these buy order flow should be consumed, and then prices should come into this zone. And by the time prices are entering into this zone, all the sell orders will become weakened, because all these buy orders, existing buy orders, the pending buy orders, consume the supply, and the majority of the supply has been consumed, and remaining pending supply, it could have been a weak supply. Weak supply means very few pending orders will be there compared to the pending buy orders in this 5 minutes zone. That's why the 5-minute zone has given a very big push and finally reached the target, 15 minutes target. Because always our high liquidity zones, the target is a 15-minute zone. Let me show you the same chart from the 5 minutes time frame. The same UPL in 5 minutes time frame. See here, we have a fine-tuned 5-minute zone here, drop, base, rally. This is inside 15 minutes. The 15 minutes is inside this entire 75 minutes area. Look into this, inside this 15 minutes area, again we have a drop, 2 base candles and a rally and follow through candles. So this is also a strong fine-tuned area. But look into this. This is the 5-minute zone, not a fine-tuned 5-minute zone. We have a rally candle, ERC candle. We have a base candle and a rally candle, follow through candles. The structure is good, it doesn't mean it is having a very strong order flow. Many times these zones will not be having strong order flows, many times. That's why they will be easily violated, even though the structure looks very good. So that is the reason why we need to depend on the price action clue. Here the price action clue is near this zone, there is a strong institutional demand will be there, the pending orders. That is not reflected in the chart. Why it is not reflected? Maybe institutions might have added a new order flow here. Because they added a lot of new order flow here, that may not be reflecting here. Next time what happened? Prices entered here and they are entering into these pending orders, and the supply is also very strong supply. That's why it is trying to consume the demand, and by the time the supply is weakened and the pending orders in this gap, in this area, they pushed the prices. So that means we got a huge rejection from here. So this is a confirmation that there is a strong institutional pending order flow comparing from this 5-minute zone. So next time when prices are entering into this zone, all these pending orders has to be consumed, and these pending orders definitely it would have weakened the supply. Because supply is weakened and the pending orders in this 5-minute zone definitely pushes the prices up, and that way it reaches the 15 minutes target zone. So this is the way you need to understand when you want to plan your trades as an aggressive trades. That means not fine-tuned 5-minute zones. When you want to plan an aggressive trade, this is the way you should plan. But always you should be very careful, because you are not experienced people. If you don't properly understand the structures, price structures, many times you will make mistakes. That's why in the initial stage, focus only on the fine-tuned zones. Once your experience grows, then slowly you can get into these aggressive trades. Because some days you may not be having any fine-tuned trades, prices may not enter into the zone. That day this aggressive trade might be working, it might be giving you a good profit. Because we have seen a few days in the past like this. But without having good knowledge, directly if you are getting into aggressive trades, definitely you make some mistakes. Some concepts probably you may not understand properly, or some concepts you may understand with your own assumptions, and you will try to plan your trades. Initial stage, you observe a lot. Go for fine-tuned zones and take trades. And remaining trades, observe in the initial stage. Once you are getting good money, once your confidence goes up, and once your experience also goes up, at the time you can plan for these aggressive trades. But the point you need to understand, see how perfectly the zone is worked. With the help of the price action clue, rejection near the 5-minute zone. Let me show you one more example on the same price action clue. And this is Adani Ports trade. This is a supply zone. This is a 75-minute supply zone. And the chart is a 15 minutes chart. So inside this 75 minutes zone, we have a rally base drop. So 15 minutes. But inside 15, I didn't fine tune 5 minutes. That means maybe the 5-minute structure is not good. That means this 15-minute zone will be violated. But below that, we have a 5-minute zone. See, this 5-minute zone is not part of 15-minute zone. Because here there is no 15-minute zone. This is a 15 minutes time frame. You can't see any 15-minute zone here. But you are directly seeing the 5-minute zone. So how good it is going to be? That we will see from the 5 minutes time frame. See here, this is a 5 minutes time frame. We have a drop, you have a base, again you have a drop candle. So this is the 5-minute zone. But this is not a fine-tuned zone. But if you observe, what happened? Prices came very close to the zone and then again it moved down. Why? Maybe the order flow in this area is very strong. Institutions might have added a new orders here. Because of that, the prices went up to here, and next time again when prices are trying to enter in this area, definitely the demand should consume this entire supply in this area, and then only it will enter into the 5-minute supply zone, which is not fine-tuned. This 5 minutes is not fine-tuned. But by the time prices enter into this 5 minutes supply zone, definitely demand would have been consumed in this area. That means by the time prices enters into this 5-minute supply zone, demand would have been weakened. If demand weaken, what will happen? The pending orders in the supply zone easily pushes the prices down until our target zone. See the next slide. See here, earlier we have seen this price action. Now next time prices came down, next time again prices is going up, and see here what's happening. Demand is very strong here, but the moment the prices reached this area, all of a sudden the demand is struggled a lot. Why demand is struggled? Because the pending sub orders in this area, because institutions might have added a new orders in this area, all those pending orders consumed the demand. See how they consumed the demand. The demand is unable to push the prices up. See how aggressively it pushed the prices up. That aggressiveness is gone here. That means this existing, the pending orders in this area, from this rejection, above the rejection, whatever the pending supply is there, the pending supply is eating this entire demand. And finally, by the time prices enter into this supply, demand has got weakened, and see how it pushed the prices down. Even again, institutions might have added some new demand, but it is not good enough to push. Further it came down and finally reached this 15 minutes target zone. See, our entry zone is 5 minutes, but we are able to push the prices up to the next 15 minute zone, opposite side zone. This is the way Adani Ports has given a very good profit during this intraday. And what is the reason for the success of this 5 minute zone? Even though it is not a fine-tuned zone. Even though it is not fine-tuned, the success is because of this price action clue. The price action clue helped us. There is a strong order flow, and also we have seen how prices are struggled in this area before prices entered into this zone, and confidently we can go for a short trade here. So this is the point you should understand about these price action clues. Hope you got clarity about the price action clue rejection near the near the 5 minute zone, which is not fine tuned. Okay, now let us look into the second scenario. What is second scenario? Multiple rejections from the 5 minute zone or 1 minute zone. Here I have given you a 1 minute zone example, and recently it happened. This is a Dalmia Bharat 75 minutes high liquidity demand zone. So we have a rally, we have 6 base candles, and then again we have a rally candle. So rally, base, rally. This is a high liquidity demand zone. But in this demand zone, there are no 15 minute zones, or even there are no 5 minute zones. At the near the distal line of this 75 minutes high liquidity demand zone, institutions created a 1 minute zone here. Many times these 1 minute zones will be violated easily. They will be violated easily. If at all they give a small push till the next 1 minute supply zone somewhere here, and again that will push, this zone will be violated many times. But there are some special scenarios. Institutions keep a huge amount of order flow. But we never know there is a huge amount of order flow, because it is not a fine-tuned zone. But how do we know when there are multiple rejections are taking place from this zone? Then that will be a price action clue. See, this is the first rejection, huge rejection. But is it good enough to take the next trade? No, it may not be good enough. Maybe this is the time it has given, next time it can be violated. But second time also it has given a huge rejection. That means it is a clear indication there are multiple rejections are happening from this zone. That means institutions might have kept a very strong order flow. And moreover, it is a 1 minute zone. Risk is very, very small. In case third time when you take the trade, if it doesn't work, that possibility is there. Your trade might be violated, right? So your stop loss will hit. But not a problem. The reason is the risk is very, very minimal. If it is a successful, you may get 1:10 or 1:15 reward you will get till the next 15 minute zone. If it is failed, hardly you will lose, because it is a 1 minute zone, risk will be very small. Hardly you may lose maybe 0.2% or 0.3% or 0.4% of your capital. But we accept risk up to 2%. Losing 0.3%, 4%, it doesn't really harm us. But if the trade is success, we get an excellent profit. See, third time again what happened, see here. Previous 2 times, prices went more deep inside. But this time, see, that means institutions again added new order flow here. And retail traders like us also might have added our orders also here. But whatever the reason, that means institutions, they don't want to break this zone easily. But how we identified? Because there are multiple rejections from this zone. That helped us to identify this is even though this is not a fine-tuned zone, but it is a very good zone, having a strong institutional order flow with multiple rejections the price action clue, multiple rejections helped us. So recently we planned a trade, and from here it picked up the orders and easily it pushed the prices into the next. Actually, strictly speaking, this is the 75-minute zone also. This is a drop, base, drop. This is a 75 minutes time frame. But this is also a 15-minute zone also. Both 15 and 17-minute zones are matched exactly here. But it's given a very good profit. So see how price action clues are helping. Why institutions are selecting sometimes such kind of zones? Because they will think, many people will go for fine-tuned zones. What we do, we will identify some non-fine-tuned zones. There we will pump our orders and we will make sure that retail traders won't participate in those zones. That is the way sometimes they may think. But we know these price action clues. Because we know these price action clues, first time we may miss the trade. But next time, with the help of these price action clues, prices are entering into the zone, we can plan the trades. So this is about multiple rejections. Let me show you the same chart in 1 minute time frame also. What you are seeing is 75 minutes time frame. See 1 minute time frame, what happened here? Prices came, moved up, again came, moved up, again came, moved up. And recently, again prices came here, again they moved up. This is what you should understand. And this 1 minute zone is not a fine-tuned zone. That's why this is an aggressive trade. Now let us look into the third scenario. What is third scenario? With the pro gap. Price action clue. Your 5 minute zone is having a pro gap. Look into this. This is a 75 minutes demand zone for the stock Hindustan Unilever. HUL. In Hindustan Unilever, this is a 75 minutes high liquidity demand zone. And this is a 15 minutes time frame. The time frame I am showing you on this chart is 15 minutes. Look here, I have drawn a zone. But is there any 15 minute zone here? No. So that means this 5 minute zone, whatever we have drawn here, is not a fine-tuned zone. Because the marked, whatever the zone we marked, that is not part of the 15 minute zone. And let me show you the 5 minutes chart for the same stock. This is the 5 minutes chart for Hindustan Unilever. See here, there is a drop, there is a base candle, again there is a rally candle with pro gap. Because there is a pro gap, there are higher chances. I am not saying there are 100% chances. Sometimes the institutions also will trap us, create a pro gap, and after that they may cancel some of the orders. And we will be trapped. But many times what happens, there are higher chances there is a institutional pending order flow is there. If prices are entering into this area, what does it mean? It should consume all the pending orders in this pro gap area. There are pending buy orders. Now institutions are keep on selling the prices here. And these pending orders, what it will do? It will consume all the supply. The demand will consume the supply. See, here strongly prices are moving down, but all of a sudden it has become slow down. Why it has become slow down? Because in the pro gap area, there is an order flow. The order flow is not, it is eating all the supply. By the time prices entered here, the supply is weakened, and immediately, even though it is a normal demand zone, even though it is not a fine-tuned 5 minute zone, but still it pushed the prices up till the next 15 minutes target zone. This is how you need to understand this price action clues. And because it is not a fine-tuned 5 minute zone, we are calling it as an aggressive trade. But this aggressive trade is with the help of the price action clue pro gap, professional gap. Okay. Now let's look into the last scenario, the price action clue. That is 5-minute zone is not a fine-tuned zone, but it is a high liquidity zone. Look into this stock, DLF. This DLF is a 75 minutes high liquidity supply zone. And the chart I am showing you is a 15 minutes chart. And in this 15 minutes chart, we have a rally based drop. This is a 15. Again, inside we have a fine-tuned 5-minute zone, but fine-tuned also high liquidity, but we don't care about that because this is anyway high liquidity zone and also fine-tuned zone. But our concentration is on the zone that is not fine-tuned. See here, you have a drop candle, you have another drop candle. These two are 15-minute zones. Is there any 15-minute zone in this area? No, there is no 15-minute zone. But whatever the zone we have drawn here is from the 5 minutes time frame. That is a 5-minute zone. Now let's go to the 5 minutes time frame. You will get clarity. See here, in 5 minutes time frame here, we have a drop candle, we have two base candles. Again you have a drop candle. Drop based drop. And this drop based drop is a 5 minutes high liquidity supply zone. You may ask me, how do we know this is a 5 minutes high liquidity supply zone? Because we took the help of NeoStock software. It's not possible every time. Many times how we identify high liquidity zones? It's not identifying, at least you will guess. If there are multiple tests are happening from here and again here and the same area institutions are creating new zones, at least we can confirm 80% level this could be a high liquidity zone. But this is a fresh zone. When it is a fresh zone, without the help of NeoStock software, it is not possible to identify high liquidity zone. So because I looked into the NeoStock software supply demand zone chain, we have there is a feature called supply demand zone chain. The Nifty and Bank Nifty analysis we are doing based on that supply demand zone chain. That supply demand zone chain for DLF stop told us this is a high liquidity zone and this one is also high liquidity. Anyway, it doesn't matter much, it is high liquidity or not. This is a fine-tuned zone. But this is more important for us. This is not a fine-tuned zone. But it is part of this 75 minutes high liquidity zone. Because this 5-minute zone is a high liquidity zone, even though it is not a fine-tuned zone. But it is a high liquidity zone, which is inside 75 minutes high liquidity zone. Definitely we can plan an aggressive trade. See, next time when prices entered into this 5 minutes high liquidity zone, see how it pushed the prices down until its 15 minutes target demand zone. So this is the way DLF has given a good profit. That means we are able to get good profits in those 5-minute zones which are not fine-tuned zones, but with the help of price action clues, we are able to get good success and also the profits up to the 15-minute zone. Your entry is 5 minutes, but your target is a 15-minute zone. That is the power of the high liquidity zones, your daily high liquidity and 75 minutes high liquidity zones. So this is the way you should plan your aggressive trades, but otherwise if price action clues are not supported, don't take trades directly on the 5-minute zones that are not a fine-tuned zone. They are very dangerous. I already told you, 80% scenarios, the 5-minute zones which are not fine-tuned, they will be violated easily. I know, I have seen many people, they just plan on these 5-minute zones and they see a lot of failures in the especially 5 minutes time frames. Okay, these are all the different scenarios about aggressive trades. Hope this information will be useful to you to understand these concepts in a much better way and also to understand what exactly a aggressive trade means according to our high liquidity zone context. So if you have any questions, please put them in the comment section. In the next video, let us talk about bull and bear traps. This is another important concept. So let me take a break here, and again we will meet in our next video. Thank you.